Welcome to this video review of the InterAcct Work in Progress system. In this video we're going to have a look at what information you can get from the software related to work in progress for jobs and projects that we currently have. Under the Jobs menu from the main menu, we have the Job Reports menu. And underneath here we've got the Age WIP report. We enter in here what date we're wanting to run the WIP report for, whether we're wanting it to print to the screen or just create the data underneath it. Do we want to see the details underneath here? How do we want to sort it by job or by customer type or salesperson? There's a few different options underneath there. And then we just hit this run button. The report comes back to tell us that currently that we've got these jobs that have a WIP balance, and we can see that we have some costs that have arrived in April, some in March, none in February, and we've got some costs from prior periods. Now normally we would expect to see positive numbers here, so this job down here to make something, that we've got $19,000 in work in progress, which means that we've had costs come in on those that job, but we haven't yet either completed manufacturing in this case or created a progress invoice to the customer if it's a contract style job. This job here that has a minus $15,000 value in it is saying that we've over invoiced that job and that we've taken up more costs on it than what we've received. And that might happen when we initially start a job, where we might ask for a deposit from a client. We don't necessarily have any costs on the job, but we still might want to take up some costs relating to that invoice. And let's have a look at how we do that. So here we are looking at a job. This is job number 1 in the system. And underneath the financial summary, we've got a summary of what's happening on the job. We can see that so far to date there has been $27,000 in actual costs that have hit this job, and that we've taken up $21,000 of those costs in invoices up to the current date. We can see underneath the invoice list each of the different invoices that has been raised. We can see this invoice here for $33,000 was raised in January, and that it has invoice costs that have been taken up of $18,000. So that would have taken up those costs, reduced the work in progress balance by that, and then show us that we still have, in this case, $6,000 worth of costs that we still need to take up. So when we create a new invoice in the system, there's a few different types of invoice. I'm just going to take one of the more simple forms of invoice, the S-type invoice. I'm going to put through an invoice for $10,000. Now, because the current work in progress balance on this job is $6,281.50, it's suggesting that that's the cost that I should be taking up at the time that I'm invoicing. I'm going to accept that value. I could put in notes on the invoice and print the invoice and everything else, but we're looking here mostly at the work in progress. So because I've raised this invoice that's taken up those work in progress costs, when we come back to here we can see that the costs taken up are equal to the actual costs, and the current work in progress balance on this job is now 0. So if we ran an Age WIP report as at today's date, we would then see that job number 1 has no current WIP balance. If we have a job that has already had all of the costs hit it, and we invoice out that job, obviously then reducing our work in progress balance down to 0, but then we later on receive some other costs. They might be related to some make goods on the site, warranty work, or just a subcontractor that's a bit late getting through to us with an invoice. If we get those invoices later on, when we're looking here at the work in progress balance, there is an option underneath the job to be able to write off that balance. So if we come through to the Transactions and Processes screen, so we come into the Close Off Jobs, we put in the date. If we want to put in a follow-up, it looks at what the current work in progress balance is on the job, in this case $495, and it's going to then remove that from the WIP balance. Because the work in progress doesn't have its own general ledger effect without us creating a journal, this closing off job process will not actually have any general ledger effect. It will only reduce the current work in progress balance on the job. And we can see that by coming back to the financial summary screen here and seeing that the work in progress balance is now 0 and that those costs have been taken up. So what are we trying to do when we are looking at the work in progress balance? Well, let's just jump back to the main menu here. Pull up our jobs menu and reports again. So if I'm running the Age Work in Progress report here for April, it pops up and tells me that currently, as at the 30th of April, that we've got $141,000 in work in progress costs. If we then ran the same report for the 31st of May, we can see in here that our work in progress has changed from $141,000 to $142,000. So what we really should be doing is creating a general ledger journal to increase the work in progress asset and offset that journal against a cost of goods sold account. So we're then saying that we're going to be reducing our costs of goods sold and increasing an asset, so that when we're looking at our profit and loss, the costs that have occurred to the business relating to our projects that haven't been invoiced yet are going to be reduced, so that in the months later, when we do bill out for the costs that we've already received, we'll be reversing out that journal, and so it will be essentially moving the costs into the same period as the revenue if we were to be running this sort of work in progress journal at the end of each month or the start of each month. The system doesn't try to break down the work in progress value against each of the different types of costs that we might have: subcontractors, materials, labour, sundry costs and machines, because at the time that we raise an invoice and take up the costs, we're not identifying what value of that is broken down by each of those cost groups or cost accounts that they might be in the general ledger. If we were to do that, or if we were doing things like just do and charge invoices, certainly we would be able to then get it so that it created journals that reduced the individual cost accounts. But the important thing that we're trying to achieve with the work in progress journal is to make sure that the revenue matches the costs. The months that we raise invoices to clients, that we have relevant costs to those in our profit and loss. So what we're trying to achieve when we're running this 12-month profit and loss, if we're running our work in progress accounts, is that the months where we've got revenue, like you can see here in February, we've got a whole bunch of invoices that have been raised, we're going to have related costs of sale rather than having them only appear in other months. So that we don't then have months where we've got losses unless there really was a loss for the business. If you have any questions about the work in progress accounting, please contact support or sales at interact.com.au. Thank you.